Back to the ripple effect of the Brexit vote. A massive sell-off on Wall Street wiped out $450 billion in market value. All major US indices ended the day well in the red, and CCV's Lillian Tan reports from the New York Stock Exchange.
Devastating day on Wall Street. Markets opened the day reeling from the unexpected Brexit vote and uncertainty over what this could mean for U.S. markets. By the end of the trading day, all major indices were deep in negative territory. The Dow Jones Industrial Average lost 611 points. The S&P was down by 3.6%, and Nasdaq lost more than 4%. Now, stocks with the biggest exposure to the UK and Europe took the worst hit. The worst among them was Invesco, the Atlanta-based money management company that receives a quarter of its revenues from the UK. It lost about 13% on its stock price this session. And also Morgan Stanley, which reported 15% of its revenue last year from Europe. It fared the worst among financial stocks, losing more than 10%. Now, Goldman Sachs, JP Morgan, Caterpillar and Boeing were all stocks that led the plunge on the Dow. Now, the question is whether this volatility that we're seeing this session will continue in the medium and long term. It's unlikely, according to Professor of Economics at NYU Stern, Gianluca Clementi. Have a listen.
It's a legitimate question to ask, are we going to get turbulence for another few months or years? I don't think that is the case. I think that this uncertainty is going to be subdued very, very soon.
Uncertainty drove this decline among the stocks, apart from the stocks I mentioned earlier with exposure to the UK and Europe. The U.S. economy, for the most part, has limited exposure. However, it's the uncertainty that drove investors here to hedge against risk by pulling out from the riskier stock market in favor of safe haven assets like gold, the dollar, and the yen, as well as government bonds. For example, the price on the 10-year Treasury note soared as its yield fell to the lowest in 4 years. And really, the winners here were those who went in early on the safe haven assets, those who had limited or no exposure to the UK and Europe, and those who went short on the pound and the euro. Lillian Tan, CCTV, New York.